Hi there, welcome to kneppyinvests. I had planned on releasing a video on Appen today on 29th of August because of the market reaction to a very negative reaction to their financial results. I think the share price was down between 30 and 35%. And then I saw EML Payments financial year results this morning before the market opened. And straight away I knew the market was going to go absolute bananas. And in fact, it did. Share price of that company rose 31.5% today. It looks like that is a classic breakout. And I'll show you the chart of EML Payments later in this video. And we have seen a lot of interesting reactions from the market over the past few days. So instead of doing a standalone video on Appen, and I was undecided whether to do that video on Appen or do a video on EML Payments. So instead of doing a standalone video on either of these companies, and more than likely, I will release videos on these two companies over the next week or so, I decided to do an overview of market reactions to companies' results. So what I'm looking at is for interesting reactions from the market. For instance, Mineral Resources share price up 8% today. John's Lyng Group up 9% today. Even Codan, share price down big after results were released yesterday and now up 8%. And that is one thing I'm seeing a lot over the past month. A lot of volatility and a lot of fickleness in the market. It seems like the market doesn't know how to read results. So you can see the share price dropping 10% and then rising 10% and then dropping 10%. And I'll show you some charts of companies that back that fickleness of the market right now. Tyro Payments, share price up 14.7%. Resimac up 20.6%. And of course, EML Payments up 31.5%. Now, on the flip side, we're also seeing some negative reactions from markets. So let's have a look at the worst performing companies today on 29th of August. And I'm going to rank these by market cap. So the worst performing company by market cap, well, it's not the worst performing company, but the biggest top loser according to MarketDex by market cap was Adbri. Share price of that company down 14.6%. I think that was a surprise to the market because the share price of that company was in an uptrend. Weebit Nano down 12.7%, but that company's share price is massively volatile. So I don't think they released the results. It's just naturally volatile. Link Administration share price down 6.7%. Vista Group down 15%. That was not on the back of their financial results. That's just the fickleness of the market. And I've taken a position in Vista Group because 4 weeks ago, I put in a bid for that company at $1.42. Now, the share price yesterday was $1.72. And for some reason today, someone just had to get out and they sold on market. So the share price dropped from $1.72 to $1.45 on open or just after open because one person decided to sell. So I'm just taking advantage of the fickleness of the market with Vista Group. And there is potential the share price might bounce back up to $1.70, $1.80 tomorrow, if not the next day, because this exact same thing happened 3 or 4 weeks ago. Lynch Group share price down 7.3%. Not sure if they released their results. LGI did down 6.8%. Fenix Resources down 13.6%. I'm glad I took profits in that company about 3 or 4 weeks ago and put the money into Mount Gibson Mining. So more positive reactions from the market than negative reactions, but definitely we have seen some negative reactions from the market over the past few days. Now to the fickleness of the market. So I've already talked about Vista Group. So we'll talk about EZZ Life Science in a second, but let's focus on Vista Group first. So share price down 15% or 26 cents today. Now, we hadn't seen any trading in this company since the 24th of August. Share price closed at $1.72 that day. And so remember, the previous day, the share price closed at $1.72. Now, we can have a look at the course of sales via ComSec. And just after open, someone just had to get rid of the shares in Vista Group. So someone sold about, we'll say about 4,000, 5,000 shares. They just dumped on market at $1.47. So straight away, that's a 15% drop in share price. And I would never do that. I would never sell on market with a company like Vista Group because 15% loss straight away just because you need to get rid of your shares. And this caused a bit of a panic in the market. So some investors saw the share price down 15% straight away and they went, oh, there must be something bad happening to Vista Group. I have to sell. And that caused a flurry of trading in this company, even though we have not seen much trading in this company over the past few trading days. So in the first hour, a lot of trading, and that continued for the rest of the day. Into the share price went all the way down to $1.40 and has recovered back to $1.46. And it wouldn't be surprising to see the share price go back up to $1.72 because there's not many sellers willing to sell the shares. In fact, only for sellers. And we saw the similar thing with EZZ Life Sciences today. In fact, there was very little trading in this company. I think they released their results yesterday, 28th. No reaction from the market. In fact, the market was up 1.6%. Share price got as high as 70 cents. So just keep that in mind. Share price got as high as 70 cents upon the release of their results. And these results were pretty good. So what happened with EZZ Life Sciences today? There was very little trading today in this company. In fact, from 10 a.m. to 3 p.m., there were 4 trades. And the dollar value of those trades were not much. And at 3:08 and 40 seconds, someone just like Vista Group had to sell their shares and they dumped on market. And that, again, just like Vista Group, caused a flurry of activity. And there was investors just dumping on market, and it caused the share price to drop all the way from 63 cents down to a low of 50.5 cents. And you can just see the amount of activity. And the share price has recovered back to 54. And more than likely, I would say the share price probably will move higher, a fair bit higher over the next few days, because this was just investors panicking. They see the share price dropping and they think something bad must be happening to this company. I have to rush and get out. That's the last thing you should do. So with Vista Group, I took advantage of that panic selling by investors, and I just wish I knew the same thing was going to happen with EZZ Life Sciences. So what I'm going to show you in today's video is the market reactions from the market's reaction from companies' financial year results by looking at charts. And the main thing I'm looking for is breakouts. And we will see the very definition of breakout with EML Payments. So before we get to some of these interesting companies, so this is EZZ Life Sciences chart. So the share price of this company is still an uptrend. A little bit of volume did come in today, but that was just panic selling. Possibly even some stop losses hit, but no reason to panic. There was a little bit of buying coming in during the end of this panic selling, and that did push the share price up a little bit, and that's always a good sign. So never sell on a panic when the company has released no news flow. Now on to interesting chart, and I'll show you actually VGL as well. So the main reason and the only reason I put in a bid for this company because of what happened about 3 weeks ago, maybe 4 weeks ago. So about 3 weeks ago on the 3rd of August, so 26 days ago, you can see this massive red one-day candlestick. And the share price on that day opened at $1.73. The low on that day was $1.41 and closed at $1.41. So share price down 17.1% in one day. The next day, the share price rose 21.3% and back up to $1.71. So I thought after that, I'll put in a bid at about $1.42. And then lo and behold, that bid was hit today. I was a little bit shocked because you can see the share price remaining between about $1.65 and $1.75 since the 3rd of August. And share price actually has moved into an uptrend. So I think things are moving in the right direction for this company. They did release their results. Now, you might argue that this company is overvalued. That's a different argument. And I think if the share price gets back up to, say, $1.75, more than likely, I'll just take profits in that company. Now, I am planning on going through quite a few companies because there's a lot of interesting reactions from the market over the past few days, including Bravura. Now, this is probably one of the most interesting reactions from the market, and it actually also illustrates a very important point. Now, I am a member of a few Facebook investing groups, and there's this overwhelming misunderstanding on why the market is reacting to results. So the market isn't reacting to the numbers. And I saw this in one particular group where they were shocked and surprised why the share price of Bravura rallied 44% upon the release of their results, when the results were pretty bad. The numbers themselves were pretty bad. But the market is not reacting to the results. The market is reacting to whether results beat or miss expectations. And also the market is reacting to any sort of outlook the management give for the company over the next year. Those are the two most important things. Don't look at the numbers. So Bravura numbers were down, profit down, revenue down. And if you just looked at that, you would be shocked. The share price rose 44%. Now, I have not looked at the numbers just yet. I have not looked at these reports. All I know is the numbers were down. So obviously, there must be something positive in the announcement, in the results. More than likely, they beat expectations, or maybe the outlook from the management is pretty good. And the most important thing with Bravura, I did take profits, so I was trading this, is the share price is holding firm. We haven't seen much selling over the past few days. And if we don't see the share price fall below about, say, 60 cents, that would be really good sign for Bravura moving forward. I might even buy back in because of this strength in the share price over the past 2 trading days. So interesting goings on with Bravura. Now onto Wesfarmers. The other thing I should point out is many of these companies, I have not looked at their financial results. First thing I'm looking at is a market reaction. And when it comes to Wesfarmers, I have not looked at these results at all. Some of these companies I have looked at results because I am a shareholder, but with Wesfarmers, I haven't looked at results, but look at the reaction from the market. So they released their results a few days ago, and we have seen the share price rally 3 consecutive days. Not only that, when we look at this daily chart, the share price has broken out. It's gone past the previous high back in April of this year. So let's just actually put a line just there. It's broken out above that particular resistance level. And the share price right now is at an 18-month high. So this is what I'm looking for when I am looking at the market reaction from the reaction from the market in relation to these financial results. I want to see potential breaks out. And this is the definition of a breakout. Whether I take a position in this company remains to be seen, but this is exactly what I'm looking for. Now, on to Australian Finance Group. Now, this is the complete opposite. We have seen a negative reaction from the market. And this is really interesting because I did actually put this company onto my watch list because it did look like the trend in the share price was turning from negative to positive. Sentiment was starting to shift. And a lot of times the market is forward-looking. They're looking forward to the results. And I think the market was expecting some good results from this company, and it disappointed. And the share price has dropped from $1.80 down to $1.50. Share price has remained not around these levels today, $1.50. And right now, the share price is in it's, I'd say, a support zone. So if we draw a line like that, and these zones are not one particular share price, they're sort of, I would say the support zone for this company would be between about $1.45 and $1.35, and the share price is very close to that support zone. But share price had been in long-term downtrend and did look like trend was trying to shift, and looks like these financial results put a complete stop to that possible shift in sentiment for this company. Another interesting reaction from the market was integrated research. Now we saw 2 big down days for this company. Share price down 19.8% on the Friday and a further 13.6% on the Monday on pretty big volume. But interestingly enough, when the company did release the results, the market actually initially favored the results. Share price was actually up, opened up on the day. And we did see a little bit of selling coming through in bunches. And this is why I think there was like a fund manager just dumping on market. And we can see that dumping on market just by looking at this 1 hour chart here. And there's a couple of big spikes in volume. And I think that was just a fund manager dumping. And that's a really interesting chart. And I think there is definitely some value at these prices because I did have a look at this company's results and definitely not negative. That's all I'm going to say. And just there is possible value here because I think the turnaround story is still in play for integrated research. I think this is just some fund manager just getting out. Now, in saying all that, the share price was trying to get out of the downtrend, has been trying for about, we'll say about 9 months. And this did put a stop to that potential shift in trend and sentiment for this company. So 2 negative days can cause harm when you do look at or consider technical analysis. What's GIN again? Jumbo Interactive. So this is sort of chart I am looking for. Does look like sentiment is trying to shift around to positive. Again, this company released some results. Now, the one thing I want to see for Jumbo Interactive is this level broken. So I want to see the share price get above about $16.10, which was the highs we saw back in January of this year. And it does look pretty good. It does look like the trend is trying to shift from, say, neutral to negative up to positive. And I think we can confirm a shift in trend, a change in trend of this company's share price if it gets above $16.10. Same thing can't be said about Pexa. Is it Pexa or Pexa? So this is a recent IPO. I think it was spun out of, was it Lyng? I think it was spun out of Lyng. And I think Macquarie had a bit of a stake in this company and they sold as well. And the share price of this company has been in a downtrend. And you can see whenever the share price gets just above this red shaded area, which is the long-term trend, we see the share price go backwards, sells off. So really that sort of red area is the resistance zone. And the share price has dropped down to an interesting level. Again, a support zone. So if you just draw a line right there, which is the lows we saw back in March, the lows we saw back in January, and near the lows we saw back in June of 2022, share price is right on that support zone. Now, more than likely, based off this negative reaction from the market on the release of their results, these weren't good results. The market was expecting more. So wouldn't be surprised to see the share price fall a little bit further from here and this support zone being broken. Now onto PeopleIn. Now, if I was a value investor, I might be interested in this company. P ratio about 11.4, dividend yield 6.7%. I had a very quick look at the results. Didn't look that bad. It looked pretty good. Revenue up a fair bit, up to 1.2 billion. Income only, or profit about $20 million. And that's probably the main concern with this company is just the profit margins are really low. But in saying all that, and this is something I'm going to do more and more, is even if I see some value, I'm going to have a look at the chart. And this chart is negative. Share price has been a downtrend since, come on, TradingView. Well, share price was consolidating, going sideways back in 2021, got to a high of about $4.90 in June 2021. So the share price has definitely been in a downtrend since the start of 2022. Share price dropping from about $4 down to $2. So share price has halved since the start of this downtrend. And share price moved through this support zone. You can see this support level at around about $2.55. Fell through that in June of this year. It rallied back up to test that old support level, which now has become resistance. And that sort of test succeeded. The share price didn't go through that, and share price has fallen away. And upon the release of their results, 3 big down days. Share price down another 3.9% today, down to $2. So even though it does look like there might be some value in this company, just the market reaction doesn't fill me with any hope that the downtrend in the share price of this company has been completed just yet. Same can't be said for Aussie Broadband. So I have been a shareholder of this company for a long time. I will always be a shareholder of this company, and I've decided to add to my position because this is potentially a classic breakout. So share price got as high as $6 back in April 2022. And it seems like they released something negative on the 2nd of May 2022. Share price dropped 28.1% on that day. Share price kept on falling, but it did look like the end had come, or the bottom had come in October of last year. Now, nothing really I wasn't really excited about the chart when I looked at Aussie Broadband because the share price wasn't doing much. And then just before the results, we did see some interesting action from the market, some volume increasing as well. And then the company released their results. Share price rallied 11% on the day, and the share price closed right on the previous highs we saw back in March and April of this year. So that's a good sign, a potential good sign. But what I wanted to see today was the share price rally above that resistance zone, and it did. We saw good volume coming through today, share price up 4.65% and closed at $3.60, well above that resistance level. So I think this is a classic breakout with Aussie Broadband. It's also a potential high quality company in the making. Wouldn't quite call it high quality just yet. Now onto a company I have owned in the past, and this is a highly liquid company. You can just see that by the chart. I bought this company at $1. I think it was $1. I can see that. I've actually noted it on the chart here. There it is. I bought at $1 back in July 2020, sold half in April 2021, and then I sold the other half in February 2022. Now, the share price is at probably an all-time high. So this is one company financial results I did want to show you, because I'll just tell you the market cap of this company before I talk about it. So keep this in the back of your mind. The market cap of this company is $54 million. They only have 11 million shares on issue. That's why the share price is so high and the market cap is seemingly so low. So not a lot of shares on issue. But let's have a look at their financial year report. So this company is all about wholesale energy, that sort of thing. So straight away, you should know wholesale energy, there has been some pretty good tailwinds behind that sector over the past year, maybe 6 months or so. So let's have a look at the Appendix 4E and annual report released on the 25th of August. And just keep in mind, again, market cap of this company is $55 million. $55 million. $55 million. Revenue up 11.7% to $137 million. EBITDA up 172% to $24.7 million. Profit up 223% to $16.8 million. So remember, the market cap, $54 million. Profit, $16 million, which means the PE ratio of this company is 3. I'm going to repeat that again. The PE ratio of this company is 3. That's one of the reasons I bought it in 2020, because it did look ridiculously cheap. And I don't think it looks more expensive now than it did back then. Probably the same sort of value, because the company's profit has grown since then. Probably the only thing that we're keeping away from this company is just the volume and the liquidity or illiquidity. But typically that won't hold me back. But I'm just concerned that the good times have been for this company over the past few months, and those good times are coming to an end. And you don't want to be holding these sort of companies when the good times come to an end. And you could say and argue that with a PE ratio of, say, 3, the market knows this already, and that's why it's not gobbling up shares in this company just yet. Now on to DGL, another company I've owned in the past, and this was another company where there was an interesting reaction from the market. First thing you should know, share price of this company is in a downtrend. So my first rule now is, and this is a rule that has been developing for a long time, is when I'm trading a company, don't buy, or even I think a company has really good value, a local company has really good value, don't buy when the company share price is in a downtrend. And DGL Group is in a downtrend. Now, when this company released their results, I think it must have been on the 28th, there was an interesting reaction. So initially, the share price had risen. So the previous day, the share price closed at 80 cents. On open, the share price opened at 87 cents. So the share price had opened 10% higher from the previous day upon the release of these results. And then a lot of selling came in, and the share price closed lower on the day. And it closed, in fact, it closed down 6%. So almost immediately, within a few hours, those who bought on open were down over 16%. And the way you stop from that happening to you is just don't buy into these companies where the share price is in a downtrend, because even if they release really good results and surprise the market, there's still going to be a lot of selling, because a lot of investors who have bought into this company over the past 2 years just want to get out. They think this company is a dog stock. They don't care if the results are good. They just have to get out. And when they see the share price rallying, there is a rush to get out of this company, and you'll see a massive increase in supply of shares onto the market. And that's what happens when you do see that increase in supply. You see a rush to get out the door, and the share price will suffer. So the results for this company could have been good. They might have been really good just based off that initial reaction from the market. But that initial reaction from the market will lead to shareholders trying to get out. And that's what caused the share price to drop. Or maybe those buyers who bought initially just were wrong. Maybe this was not a good result from the company. Now on to IMD. Is this Imdex? Oh, yes, Imdex. So even though the share price of this company rallied 6.3% today, yesterday on the 28th, when the company released their results, down 15.8%. So this was, I wouldn't say it's a dead cat bounce, but definitely there's some sort of bounce. And you can see that bounce when we look at the hourly chart. Share price plunged yesterday on pretty big volume, less volume today, as the share price has bounced. You typically see this sort of thing when the share price has dropped a lot in one day or risen in one day. You will see the bounce the other way. And typically, I will take advantage of a company that has a positive reaction to announcement, and then we do see a little bit of a dip in the share price, and that's the time to take advantage when you see that dip. Sometimes it doesn't work. Sometimes you don't see the dip, but a lot of times you do see the dip. And when you don't see the dip, that's actually more positive. And just like when a company releases something negative and you see a big down day and you don't see a bit of a bounce, that's also pretty bad news as well, because no one sees value. Appen, so I was going to do that standalone video on this company. Share price down massively. Was it down 35%? 34%? 32%, I was overstating. So again, why would you buy in this company? Just look at the chart. Share price has been in a downtrend for about 2 years. And I have made mistakes with this company. I'm a shareholder of this company, and I have made mistakes, some big mistakes. And that's one of the reasons why I've developed some rules. And if I followed my rules, well, back when I took a position in this company after selling and taking massive profits, if I had rules in place back then, I would never have bought back into Appen, because the shares of this company have been a downtrend since late 2020. So we're talking about a 3-year period when the share price of this company has been in a downtrend. And only once did it look like potentially the downtrend was coming to an end. And that was in June of this year, late May, early June. Remember, that was around the AI craze. That's why Appen share price went on a bit of a run, but it was a false breakout. And then the company released the negative financial results, and the share price down to $1.50. We just don't know how low the share price can go down from here. Even those who see some value, markup of this company is still pretty high. And who knows, this company could be in decline for the next few years. Share price could halve or could go down 75% or even 90% from here. We just don't know. And that's the advantage of using technical analysis for these companies, for these low quality companies. Yes, I would define Appen as a low quality company because we just don't know how low the share price can go. And if the share price does break out, if the company does release some positive news, some positive financial news, that's when we take advantage. And that share price of this company could be 50 cents at that point in time. So that's the things I've learned because of Appen, is don't buy when the share price in a company is in a downtrend, particularly a 3-year downtrend. Now onto Codan. This is an interesting one. So I was trading this, I no longer am. Took some profits because the share price was floundering around. So I decided just to sell. And then there's so the share price down 7.8% yesterday and rallied 7 or 8% today. And we can really see the fickleness and the volatility in the market just by looking at the 1-hourly chart. Just look at that volatility the last few days. The market doesn't know what to do with this company, whether the result's bad, whether the result's good. And when I say that, I mean compared to guidance. And was the outlook good? Was the outlook bad? We just don't know. So we're seeing wild fluctuations in the share price from hour to hour. Pretty big volume coming through as well. So the market just doesn't know how to read these results from Codan. Now, IDX, which is Internal Diagnostics. Internal Diagnostic, come on, let's go TradingView. Yeah, so this is another interesting reaction. I don't know much about this company. I'm assuming they're imaging sort of machines, that sort of thing. I'm assuming. I've never looked at this company, actually. Engages in the provision of diagnostic imaging services, yeah. And just by looking at the chart, nothing to get excited with. There is no trend. In fact, I'd say the trend is neither up or down based off what's been happening in the last few months. But the company did not help themselves by releasing their results today. Share price down 6.1%, pretty big volume coming through. But I did see there is a bit of a bounce in the share price because there is a bit of a shadow, and you can see that, yeah, a lot of selling the first 2 hours. Share price down 6.4% the first hour, down another 4.5% the next hour. But there was a bounce in the last hour. Share price up 4.3% in the last hour on the biggest volume of the day. So obviously, a fund manager saw some value when the share price got down to $2.80. I have no interest in this company. So this is not what I'm looking for. I don't care about these little bounces. What I'm looking for is a breakout when I look at the daily chart. Don't see that with Internal Diagnostics. Now to Doug. Not my friend, dug the company, dug technology, and I've been holding this company because of the chart. Just a technical analysis buy. I forget exactly when I bought in, but it was during the start of this uptrend, and the share price keeps on going up. And why is the share price, or why has the share price been an uptrend? It's not because the market just wants to buy this company. It's because of really good news flow from the company. So positive news flow from companies will drive the share price higher, particularly if that positive news flow is good financial results, profit upgrades, or financial year results. And this company released positive financial year results. And I'm just saying that without even looking at the results, even though I'm share of this company, share price up 10.2% on the day on really good volume, and the share price at all-time highs. And just the reaction today has been really positive. Share price just going sideways, not a lot of selling, which is understandable because, again, share price is at all-time highs. I think the share price is all-time. Yep, share price is at all-time highs. So have a look at DUG Technologies' financial year results. I don't think this is sort of a company you want to own for the long term. I'm pretty sure this company might be a little bit cyclical, but when the trend is up, when the trend is in your favor, just ride it. So I am up over 100% with DUG Technologies. Mineral Resources. So this is the highest quality mining company on the ASX. I'm going to say it right now. This is the highest quality mining company on the ASX, and it does look pretty cheap right now. Their results were pretty good. Now, this is just based off the numbers. So I had a quick look at the numbers, and everything was up, say, 90% from last year. But that doesn't mean that's going to continue. That sort of momentum will continue in the next few years. It might. But the market liked it. Share price up 7.9%. But just based off the daily chart, if you're just trading this, I would not buy this. This is not a breakout like we have seen with a few other companies, including Aussie Broadband and Wesfarmers and EML Payments. This is just a bit of a recovery in the share price. And the last time the share price was this high was the 10th of August. So we're talking about 2 weeks ago, 3 weeks ago. Now to the breakout. So Aussie Broadband, I think, is a breakout. Wesfarmers looks like a pretty good breakout. But EML Payments, this is a classic breakout. So there were signs of this breakout possibly happening over the past few months. So the share price of this company has been in a long-term downtrend because of negative news, things happening with Irish banks and that sort of thing. Just look at this awful, awful, awful chart. Disgusting chart. It all started, I'm going to get the date, May 2021. So it's only about over 2 years ago when the share price dropped 45.6%. And after the share price was in a really nice uptrend. After the company announced, I think this was on the back of the investigations into money laundering, that sort of thing in Ireland. And the bad news just kept on coming. We saw the share price down 38% on the 26th of April. We saw the share price down 24.6% on the 11th of July. And then the last of the bad news occurred in October of last year, down 35.7%. That was the low in the share price. Just look at that one day, massive volume, and then the share price recovered the next day. That was the low. So the share price test that low back in March of this year. Now, so one of the things I'm looking for is, you can see that long-term downtrend with the blue line in the middle. So that's the long-term downtrend. The short-term downtrend is the other line, or the shaded red area. So what I'm looking for here is the shorter-term trend line or trend zone to get into the longer-term trend. And that's been happening with EML Payments over the past few months. And the share price has been going sideways, a little bit of consolidation. Now, within this consolidation, we can see the share price rising and falling a fair bit from day to day. But just by looking at the short-term trend, I'll just show you the short-term trend now. So just by looking at the short-term trend, this looks bullish. So if you don't look at the long-term trend, the short-term trend is looking pretty good. Share price got above the 150-day moving average. So I'll put back the long-term trend. So that's one of the things I'm looking for, is the share price to get above the 150-day moving average. Share price get above the long-term trend, which I blacked out both trends. And the other thing I'm looking for is for the shorter-term trend to get above the longer-term trend. And that is going to happen over the next few days because of what happened today when EML Payments released their results. And the share price has broken out. The last time the share price was this high at 98 cents was back in September last year. So not quite a one-year high, We're talking about 11-month high. But more importantly is why the market reacted really well to these results. And this is one result I did look at. So what I typically do, particularly for companies I own, I will have a very glance-through look at their results. And immediately when I saw this company results, I went, oh, the market is going to love this. So why did I have that initial reaction when I saw EML Payments results? So just don't forget, the results on the market reaction from the results is not based off the numbers. It's not based off profit. It's not based off revenue. It's based off the difference between the results to expectations or guidance and any sort of outlook the company has given. So hopefully it's opened up now. Okay. So the most important thing here is the title of this document. EML exceeds guidance for financial year 23. So straight away, without even looking at anything else, exceeds guidance. That's the most important thing. Record revenue of 254.2 million, exceeding guidance. Group underlying EBITDA, exceeding guidance. Net loss after tax of 284.8 million. So if you just look at the profit or loss of this company and saw they had a loss of 284.8 million, you would think, these are horrible results. I've got to sell. But the most important thing is that exceeding guidance and any sort of outlook that this company did release, which I don't know. All I had a look at when I saw this company's results was that exceeding guidance. And straight away, I knew the market was going to go bananas over this company, and it did. Share price again up 31.5%. And this is a typical and a brilliant and a classic breakout. Now it's a Resimac. I don't know anything about this company. I think they give out loans, that sort of thing. And I've been talking about how the market has been really fickle, volatile. So Resimac engages the provision of mortgage origination and management of home loans. Yeah, so loans. So just look, this is a daily chart. Just in the past 5 trading days, we've seen the share price go down in consecutive days. Actually, I'll show you this via ComSec, because we can look at the trade history. So 4 days previous to the release of the results, share price down 4%, 4.8%, 4%, down 7.9% on the 28th of August. And then the company released their results, share price up 20.6%. Just imagine if you sold out of Resimac yesterday at 87 cents, just to see the share price rally 21%. So no doubt the market, or these were good results. So I'll probably have a look at these results. Resimac announces financial year 23 normalized profit of 73.7 million. What's the market cap of this company? 73.7 million. Market cap is 423.7 million. Yeah, this deserves a closer inspection, I think. Resimac. But when you look at the daily chart, so just remember, don't forget, one thing I have to look at or look for is the share price has to be not in a downtrend. And I would say just now the share price of Resimac is still in a downtrend just by looking at this daily chart. So even though the results might be good, I still think there's going to be a lot of volatility. I need to see the share price move into an uptrend. The last potential uptrend failed back in January of this year. You can just see the share price rallying, and it failed fairly quickly. Now it's a Fenix, which is an iron ore. I have held this company in the past. I took profits when the share price went up to about 32, 31.5 cents. And the company released their results today. I did have a look because I still am interested in this company. Share price dropped 13.5%. Everything was down, which is understandable because iron ore prices are down. I think they also decreased the dividend as well. So I'm very happy about selling out of this company and taking profits. And there's potential. The share price of this company could fall back to 20 cents and then rally again when iron ore prices start to go up. So, of course, this company's share price and performance, financial performance, is going to be highly influenced by the movement in iron ore prices. Now onto National Tyre and Wheel. Now, this was really interesting because just by looking at this daily chart, it looked like things were turning around for this company. You can see the share price was in a short-term uptrend, and share price had moved above the longer-term uptrend, had moved above the 150-day moving average, and today, company did release their results. And we saw a very interesting reaction, pretty good volume coming through as well. And that interesting reaction was someone sold a fair bit in the first hour. Share price down 11.5%. Share price got as low as 54 cents today. And then in the last 2 hours of trading, massive volume coming in. So when the share price fell to that, mid 50-cent range, there was a lot of support, which is understandable because the share price looks like it's moving up. And I think there is a little bit of a shift in sentiment around this company. And I have heard some interesting stories around tires and EVs, and tires could be the place to be when we are talking about EVs, because how heavy or heavier EVs are to traditional cars. So maybe that's why the market is getting excited about National Tyre and Will, and a nice bounce in the share price today. We need to see that bounce continue over the next few days. So just an interesting chart for this company. Now, this company is not expensive. Price to earnings ratio, well, don't look at price to earnings ratio. It looks high at 40.9, but that could be high. It's sort of like a mining company. You buy when the PE looks pretty high, and you don't buy when it looks really low. So you don't buy mining companies when the PE ratio is like 4. You buy it when it's 40. And there's reasons behind that, which I won't get into this video. So PE ratio of this company is 40.9. So it might be now the time is to buy this company, because the market conditions have not been good for this company. So profit is abnormally low, which means the PE ratio is abnormally low, just like mining companies. When the market for, say, iron ore is suppressed, you will see BHP, Fortescue have really bad results. That's the time to buy. Market cap of this company is 90.6 million on revenue of, I think the results have come in. There we go. Well, last year they have revenue of 558 million. Gee, the margins of this company is really low. Anyway, John's Lyng Group. Not many companies to go. 5 after this. So this is a company I owned for the long term. I think this is a high quality company. The results look fantastic. Really good growth. Exactly what you see. But when you look at this chart, there's no trend at all. In fact, if you look at, say, the day or the weekly chart, you probably would say the trend is down. You can see by the daily chart, and this is really important. You can see if you just draw a line at all it's not going to be a straight line. It's not going to be a straight line because the lines, the highs don't exactly match up. But you can see each successive high is lower than the previous one. That's actually not a good sign. So what we want to see is this trend line, downtrend line, to be broken. Now, the share price is still sort of going sideways right now, even though the share price rallied 9% on the results. But the share price has bounced off the support level in June. That support level is just under $5. So ideally, what I want to see, and I probably would think about adding to my position in this company if I saw this downtrend line broken. Another really interesting reaction from the market when it comes to MMA Offshore. These results look pretty good. No disagreement. No, what was I going to say? No disappointment, I suppose, is the best word. But then the volatility today was insane. And you'll see that volatility maybe when you look at the 15-minute chart. So in the first hour, the share, you get to see, look at this. You just see this. In the first 15 minutes, the share price of this company dropped from $1.38 down to $1.26. So talking about 10% a decrease in share price in 15 minutes. I'm not sure why someone was selling. And then in the next 15 minutes, share price rallied 10%. And then we saw that volatility continue for the rest of the day. But really interesting trading upon the results. So someone saw something good, someone saw something bad. And overall, share price only down 2%, which is not that bad overall. So share price still in an uptrend for MMA Offshore when we look at the daily chart. Still in a beautiful uptrend. So this is nothing to be concerned about at all. Unlike Adbri, this is something to be concerned about. So it did look like the market was expecting some good results. And there was a big update. I forget why Adbri share price rose 21.9% on 25th of May and just kept on rising. And then all of a sudden, the company released their results today. I did have a look at the results and straight away went, oh, they don't look that good. But again, I'm not comparing them to guidance. Maybe they were going to beat guidance, but based off the market reaction, share price down 14.6%. Not only that, share price almost closed near the low of the day. That's actually quite bearish. This was not good results from Adbri. Now, you might argue the share price is still in an uptrend, but you'd need to see the share price bounce from here. I wouldn't want to see the share price drop any further, but negative reaction from the market. Unlike Tyro, share price of this company up 14.6%. Now, I wouldn't get excited about Tyro just yet, because just by looking at this daily chart, share price is just going sideways, bit of volatility. It's not in an uptrend. This is not a breakout. This is just some bit of volatility. Some pretty big volume coming through today. So there more than likely was something to like in the results. But again, I think because of the share price being significantly higher, or maybe not significantly higher, but it's been higher for a long period of time over the past year, there's going to be a lot of resistance moving forward for Tyro. And the very fact that their share price couldn't get above about $1.32 is not a good sign. So I wouldn't be surprised to see a little bit of selling coming in during today. But the main thing is, with the high volume today, pretty big volume, what that means is a lot of the supply that was coming to market because of those shareholders who saw the share price rally 14% and thought, oh, now is my opportunity to sell out of this dog stock because I bought in at $1.60 back in February of this year. And this is a dog stock because the share price has fallen. Now's my opportunity to sell. So there was that extra supply of those dog stock shareholders, but there was enough demand of Tyro shares to meet that supply. And that's why we didn't see much of a sell-off today. In fact, if you look at the hourly chart, you don't see that volatility like we have seen in some other companies' shares prices during today. So share price going sideways, that's actually a pretty good sign that there was enough demand meeting that supply. So good goings on for Tyro Payments. Now, the last two companies I'm going to look at, Perenti and DDH. Now, DDH released their results today. So this is Perenti. And you can see this really negative reaction from the market when they released their results. Now, there's one reason why I wanted to show you these two companies. So the share price of Perenti has bounced off a support level at $1. So share price now $1.04. And because Perenti is taking over DDH, the share price of DDH has been affected by the movement of Perenti. And that's why share price dropped. Share price dropped 10.5% for this company on the 22nd of August. Share price is around about 84.5 cents, up a little bit today. The reason I wanted to show you both of these companies is because of announcement. In fact, I'll show you Perenti. Announcement this company, or both these companies, released today. The title of this announcement from Perenti and DDH was Perenti confident of returns to shareholders. And I think this is just management just soothing concerns of the market and shareholders, because the share price of the market has punished Perenti. And this is just them saying things are looking pretty positive for this combined group, this takeover bid for DDH. So I think this is just management doing what they probably should do. Just calming the fears of the shareholders who for some reason saw the drop in share price and maybe were panicking and trying to get out. So I probably actually do like this this announcement from Perenti and their management. So yeah, good work, Perenti. Anyway, I think that's all I have for today's video. Time is 5:40 p.m. This is going to be a long video. If you have any questions about any companies I showed you in today's video, just leave your thoughts in the comment section of this video, and look out for standalone videos on Appen, EML Payments. I've already recorded a video on Corvest. I also have to do a video on A2 Milk. I'm no longer a shareholder of that company, and there's quite a few other companies I want to do videos on. If you have any suggestions of companies you'd like me to do a video on, just leave your thoughts, your suggestions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.